This presentation is offered to hopefully help you and not add to confusion on your terminology assessment. The definitions that were posted in the terminology discussion board are great, they're accurate, and they will be helpful in preparing you for the assessment, but different words may have been used than what you will find in the assessment, so I'm providing this to hopefully help you make those connections, and I'm sure you'll be just fine. Think of a purchase requisition as an internal document, sometimes used just to request a purchase order or the first step in generating a purchase order. And sometimes when a district has a local warehouse where they, keep chalk and paper and that kind of thing that's commonly used, a requisition can be used just to request some of those supplies from the district warehouse. A purchase order, being an external document, is the piece of paper that's given either electronically or hard copy to a vendor to order some materials. This slide has a lot of information on it, so I suggest that you pause the presentation or come back to this slide so you can really study, think about, ponder, and really grasp these so that it can be stuck in there in the dendrites in your brain. Basically, what you have across the top here is the first part that you would see on a line item in a budget. Overhead and indirect costs are very closely related. We tend to think of overhead as the cost of rent and utilities. Indirect costs are those that it's very difficult to segment out and charge to a particular part of an organization. For instance, can you determine how much of the air conditioning at your school you use in your own classroom? Probably not. So air conditioning would be an indirect cost. Sometimes federal grants will allow you to budget for indirect costs and help with the expenses of the school district. Usually not, though. Salary increases, the different methods are used for different reasons, but primarily if an organization uses the same method year after year after year, things are going to get out of kilter. For instance, if every year they gave an across-the-board 3% raise to everyone, the superintendent would get huge and huger and huger raises, while the part-time crossing guard would get very, very small raises, and over time there would be a huge discrepancy across all the employees in the district. Across-the-board raises can also be a dollar amount. For instance, everybody, top to bottom, crossing guard to superintendent, gets $500. That's an exact amount rather than a percentage. Basing a raise on the midpoint means you're going to take a group of employees, say the teachers or the custodians, and you're going to say, we're going to base a 3% raise on the midpoint. So they're going to look at the highest paid custodian, average that salary with the salary of the lowest paid custodian, whatever that comes out to be, say $20,000, which is kind of high, but that average, then they would give 3% of $20,000 to all custodians, which would mean that the custodian with the higher salary is going to make less than a 3% raise, and the custodian with the lowest salary is going to make a more than 3% raise. Another way of doing it based on range is to do a graduated thing. Let's say secretaries, campus secretaries in the school district. Let's say we take the highest paid secretaries and the lowest paid secretaries. The highest paid secretaries we're going to give a 1% raise to. In the middle we're going to give a 2% raise to, and at the bottom we're going to give a 3% raise to kind of keep things steady that way. So that's kind of a graduated based on the range of where they are. We'll talk more about this, but for now that should get you through the assessment. These are two fairly common types of budgeting methods, and what's written here can explain it, but incremental budgeting is probably the more common used. On this slide, I think I only need to take a moment to talk about encumbrance. When money is encumbered, it means that it has been promised to someone, but it hasn't yet been paid. Kind of like when you go to the store and write a check, you've promised the store you're going to pay them, you go home with your goods, but it's couple days later till the bank actually processes that check and takes the money out of your account. That in-between time is when something is encumbered, or that dollar amount was an encumbrance. It's kind of like when they give the purchase order to the vendor to buy the paper, but you say, hey, we're not going to pay you till we get the paper. So once the paper arrives at the school, the principal lets the finance office know the paper's here, go ahead and pay them. In the meantime, in the software, that's shown as an encumbrance, meaning don't spend this money twice. You've already promised it to this vendor for the paper. And once then they've paid the vendor, then it becomes an expenditure. This slide is just mainly to point out that accounting standards and accounting principles are used interchangeably, and both of those come from the Government Accounting Standards Board, an association that promotes good practice in all government entities. Again, just like with salary increases, we'll be discussing these two items a lot more, but for now I think there's enough information on this slide to help you do well on the assessment. So you're done, and I think you're ready for the assessment. But I do want to remind you, what's important here is how well you grasp the terms, not how many points you make on the assessment. But I know you'll do fine. Thanks for listening.